All right, welcome, everybody. This is Wednesday. You already know Sauce Factory Wednesdays with the cheat code algo. All right, today we're going to be going over using the Fibonacci for entries and exits, determining the trends, looking at reversal points, support and resistance, using order blocks and fibs, and yeah, everything else. We're just going to be rocking with it. If you have any questions anytime, please feel free to stop and ask. If I move past something too quick, just ask a question. I go back, go over it, make sure you get it. The whole thing about this is we need understanding. Want to make sure everybody got a clear understanding on what I'm going over. If you don't, raise your hand, whatever. Ask the question. Want to make sure you get a clear understanding before you leave here. Okay. So without further ado, let's get smooth. So we're gonna start off on FedEx. FedEx had a nice little setup today. I actually was waiting on this. I had found it through a screener. So I'm gonna walk you through my normal setup like I do on a Sunday. And it's gonna start on a weekly chart, right? I'm gonna mark my zones out. So I'll mark my weekly high low like that. Boom, boom. Walk y'all through this, right? Real quick. Now from there, we're gonna drop down into our daily charts. So as you see, on Sunday last week, this was the weekly high. Today we took the weekly high, but you see we got rejected. You gotta ask yourself, why did we get rejected? Well, up in here is a reason inside of this. On the 4 hour, there you go, right there. You had the little order block. Let me map this out for you real quick. Boom. So I talked about this in other classes on other videos, right? The three candlestick order block continuation. So you have a bearish candle, doji, continuation of another bearish candle with some power, right? So all you do is draw that box around the doji. This is pretty much the problematic candle right there. That's your target. Boom. Here. Nah. I can grab these. There you go. That's your target candle, right? In that pattern. So you look for these patterns. You get to a stop, then boom, indecisive candle, make it look like it's about to go up and continue to the upside, but it actually will fail and it breaks down. Typically, how you would enter these said candles, right? It just say you trading and you see one pop up on the chart and you actually want to trade this because you know it's going to continue. Well, real quick, let me grab a short position drawing tool. You'll place it right there, right? Stop loss at the top of this wick, and then you'll go to the pretty much you'll probably target a low or try to find like any type of market structure that you'll want to target, right? So let's look at this chart real quick and we'll say, well, this is the last swing low, right? And we want to target that. Boom, that'll be our target. Now, to make that make more sense, right? Let's add some fibs to this. If it started as an uptrend, right? And now it's turning into a downtrend because they met some form of resistance and price started to shift momentum. So let's say, all right, cool. Let's say it's just a pullback. Maybe we are wrong. Maybe it's not a downtrend. Maybe it's going to be an uptrend, just a pullback, whatever may be the case. So you can actually run fib starting at this low, swing it up to your last swing high, say boom. And you can go at it like that. That's one way, correct? So you can say, well, I'm going to target the 61%. It'll go there and bounce. Or I want to say, hey, I'm going to target 78%. And you can start this gauging, right? But if you feel like this is a shift in the market and you know that it's going down, since we looked at the weekly chart, we already know this been in a downtrend. So we know good and well this was just a pullback to let us in on this bear trend. So technically, I feel need to go the opposite way. It don't need to come from here to there. It need to come from here to there. Or you can go from the highest point, which is here, to the lowest point. Is there, right? You can run multiple fields at different pivot points. And price is not no, oh, you only got to go one. You can actually customize this to run it from multiple levels. It's not that basic as say, all right, I can only run it here, right? So technically, We can run it here to this low because this was the pivot low, right? That caused all this change. So let's clean this up real quick. Get that out the way. Boop, boop. Okay, great. So looking at the grand scheme of things, this was our high because that's where we came from, and this the low. So we're looking for a pullback. Guess what? We got a 23% retracement off that higher swing. Now, let's say we want to run another fib because technically it pulled up. This gave us another pivot point. So we want to run to the same exact low. You ain't switching it up, same low, right? Now, that's why I got multiple templates so I can make these things stand out. I guess what? From here to the low, where did it pull back? At 88% retracement from this swing point to here, right? So boom, boom, same low, on the grand scheme of things, that's a 23%. But in this micro trend, that's an 88% retracement. And it reject, it caused the resistance because all you're really looking for is resistance of the trend. Now, it wouldn't help you to run a fill from this swing down because they actually took out that high. That was an internal change of character, right? But they did not get the external change of character. So you can either run one from the higher point and say, okay, that's 23% retracement. That's not so strong. But if you focus on the area where it's most effective, say I'm just looking for a quick little swing trade, I'm not going to be here for long. You can actually tighten up your fib and run from this pivot point to the most recent low where price actually took off at, right? So we can remove this one and we're just going to focus on this one right now. So understanding that, hey, this was a pullback, we'll say like, okay, cool. Now we can change up some things, right? I like to use negative 27s and negative 618 extension levels, right, to determine price targets. So we can actually swing this out a little bit more. Boom. And as you see, where price turned at the negative 27. Sometimes they get to the negative 61%, but a lot of times they hit the negative 27. And if you want to say, you back test and you want to know why it stopped there and decided to turn, what I always recommend, just put a horizontal line right there real quick. And we're going to back out to a daily chart just to save ourselves some time and effort. And we're going to retrace right back over here. And now you see where they came back into. We had a nice little imbalance and a fair value gap right here that price dropped down into and keyed off of. Here's our LVG right there. Bing, bing. All right. So from the zone, it created a zone here at 236.74 to 233.21. And as promised, they dropped down in there, keyed off of that at that level. Boom. It then pivoted and went right back up to make the secondary retracement. At this point, that's when they took out the weekly high to form that retracement. But once again, we still stopped in this said zone, right? So from the initial play, let's remove that now. On the 4 hour, this is where our order block at, but this also is a gap here, right? It's a micro gap, but they still will fill these gaps. You also have a 2 candlestick order block here. So you can highlight this blocks, or you can go down to the 4 hours a little more cleaner. So as you drop down in the lower time frames, that's how you find the sniper entries, right? Reason why we go down in the time frames, we want to find that sniper entry. We want to find out like exactly what is the key problem because we don't want a large zone, but then they're gonna make our entry sloppy. We want to be in drawdown longer than necessary. And on top of that, we will make less money because you can get that sniper entry, right? You have the ability to save yourself on drawdown. I mean, you make profits faster. The longer you're in drawdown, there's less money you making because you're spending more money red. So by the time it goes back your direction, then you'll start seeing green. And this being an option trade, you don't want to be red for long because that tears up the contract. Hindsight is if you reserve capital, do not load the boat on initial entry, you'll be able to scale in as the price steady goes deeper into the zone and that you comfortable with your technical analysis. Say, hey, if it goes outside this box or it takes out this high here, right? So let's say this high, that's an exit, right? this is the no-go zone. So if it goes past 254, I'm definitely out of Dodge. Maybe want to go up a little bit higher inside of this candle. You don't know, right? But you do know for sure if it goes past 254, I'm out the trade. I'm not holding on to this. The aggressive stop is right here at this level. It's right at 252.62, right? So you look at it, you say, okay, I'm not gonna play around here. This at the 78%. It shouldn't pass that up because they rejected at the 88% for static purposes. Let's set the long short position up, right? I prefer to stop like right here, a little bit outside the boxes, give yourself a little wiggle room, right? So your stop should land at 252.99. And what you want to do is target the last swing low, right? So the lowest point. I want to see if they take this low out. That's a conservative move, which is an 11-point move. Not bad. If you think they're going to revisit the lows, you got multiple contracts. You do as you want, right? Then you can go there to the 232. Once again, it's not financial advice. I'm just telling you what you could not do. Okay. So take it with a grain of salt. But that's what you'll want to do. You see that happening. Your stop loss is already defined by market structure in the order block. Your Fibonacci already gave you the levels. You want to readjust your fibs now? You can. You can say, all right, I'm going to swing to this low now, right? Because we got a new low. I'm going to go to that low. Where's my fib stopped at? The 78%. Right? Ain't going to be much of a difference between that swing to this swing, but you can move the fibs and it'll still give you that different calculations, right? So we made a 78% retracement from this swing high to this low, back up 78%. You can leave that fib as is, or you could have added a fib from here to here. Still would have gave you the percent. Right. So let's move it. Let's move it to this swing high. And say, okay, cool. Now you look at it, it went almost to an 88% retracement, 78%. Not much of a difference. But the point of matter that is key here is the pivot point. This is the pivot point. Long as the price stay below this line here, you can still use that fib, or you can go back over here. It's not much of a price difference, so that's the reason why the calculation is not going to be off. But just using that and being a little patient with your technicals. Once you see that rejection, come on now, that's a good breakdown. Let's go down to the 1 hour, see what shook out. Boom, got there, consolidated top, drop with force. They picked it back up for a pullback, then boom, there you go. And you just smooth selling. You had an order block, your fibs line up with the resistance, it respected your resistance, you take the trade. Not that, stay smooth like that. It's not a lot to it. Believe in the technicals. All right. Well, that is FDX. I check let me check out this pile. Mm-hmm. Mm-hmm. Do. All out toy. Mm. All right, we really want to pull it up. Let's go to this 3 month and want to break it down from there. Jeez. They kind of scrape vertical. I don't like that. All right. So we start from the conception of this thing. Goes there. Let me switch this. These fibs. All right. So currently at a high. Mm, I don't look at it. Let's go down to the 1 month. I don't like how this looking. Uh, if you looking at it for bearish intentions, sure, right? But you see this thing forming a nice little evening star in the 1 month. You got 21 days for this month to close. So I want to see how this month close. But if not, look like with this bearish intentions, look at a lot of downturn. And if you're gonna discount, you're looking at a discount of 50%, maybe the 154. So you're looking to go long on this. I say wait till it come to a discount zone before you start looking to get in. So here, right, you had the bearish Harami. come in right there at the top. Then you had this bearish engulfing, displaced price, right? So we had our displacement. The cheat code called for the change of character here, right? Because that displacement took place. So you got to change the structure. Boom. What happened? They tried to pick it up. They could not. It's on a weekly chart now. Yeah. And then this week, you got one more day in this week, and it's a bearish candle. Very strong bearish candle. So I want to see, I'll let it come down to this 38% retracement, maybe a 50%. See if they can pick it up. See, you got some buyers in here along these lines, but this is a lot of selling pressure, right? Let's look what the MACD got. If you look at your MACD, everything is setting up for the sell. You just got to sell fresh sell signal, a change of market structure, and things pushing down. Do do do. Mm-hmm. They take set an alert for 261.33 to see if they're gonna take that low, right? Set an alert for that because then they're gonna be a nice breakout. Some people may be taking that breakout. Most people probably already in from this breakout of 287.74. So with that MACD open up like that, that means a lot of bearish intentions. Let's back out to the 1 month. I want to see what that MACD looking like on that. Oh yeah, it's starting to curl. You see, they've been running too hot. Look at the swing. See how they up? The top and starting to close up. That thing get a red dot on that 1 month, they gonna fly. So let's see if they can pull it down. Only thing that's also in your favor is we above the zero level, right? So understanding we above that zero level, we still in bullish territory. That means they have to come down. This reason why I like to tell you about these volatile stocks, right? I want y'all to watch this. I'm gonna use the angling tool. So this is a trend line that shows you the angles, right? And you'll see what's healthy and what's unhealthy. So this is the angle of this said trend here. All right. Let me make sure to bump that up so everybody can see that. Oh shit. Hmm. No, thing is show me, but all right. So this is at about 28 degrees, right? Now, typically you start having problems when the angle start changing like this. This went 67 degrees before it came back down, right? Creating a bump and run. Now, what happened again? You see how I start coming up? Boom, 69. Okay, we still look like we got some type of reversal pattern here, right? Boom. We had a 77-degree. Okay. It went up that high. That is not normal, right? That's not good price action for price to spike like that. It have to build a base. It have to pull back, build a base, and then go up. But the steepness of how they bought price up, that was a liquidity run to trick people out the bag. So once they got everybody up, institutional investors got in here. They slowed down, took some profits. They let retail investors get in on these said candles. And then one last hurrah, run the bag up. And that's when you get the diamond hands people, right? They'll love to run up on the diamond hands and then they sweep the market. This all institutional investing leaving. This is all of them leaving out the market. They gave you a slight hint here. You still holding the bag, saying there's going to be a small pullback. They took your money here. Okay. So that's why you got to pay attention when things running up like that. The moment look like it's about to have any bearish intentions, and you can get you a cheap little put and see what's gonna happen because nobody expecting this thing to drop. Nobody expecting that thing to get pulled, the rug to be pulled. Nobody ever see it coming, so you can always run it up. Now let's say, well, we see what happening. This the last pivot point here, right? So it's like, okay, cool. You can run an extension. Say, well, at all time highs. So you run an extension from this low to this high down to this low. This is a fib extension. Look at it. It hit your 100%, 127. It got stuck in between there. Notice after it closed above the 100% fib extension, it started having trouble With the 127, it couldn't get nowhere close to that. The moment you got to close, you should have went short. You know what I'm saying? Now let's go down to the daily chart and bust this down. So you look at it, right? Because those was weekly candles. Looking at how price moved, right? You had days of consolidation between the 100% and the 127 Fib extension. When you see that, you got to ask yourself, like, what is going to happen here? What's really good? All right, nothing shook out. It ain't going higher. It ain't making no new highs. Well, sure, it's already at a extreme level. I might as well shoot my shot and get some of that. Cool. Put on a put position, right? Yeah, look at it. Yeah. So here's another thing too, right? Y'all want to pay attention to. You see this how I put this gap in right here? And this how to get the rest of people money, right? So that large candle we seen on the weekly, that was his gap candle, right? So they create the gap, they trade into the gap, then they drop it. When they do this is a strong continuation pattern to the downside. When they do that, they didn't even fill a gap, right? So we're gonna run another fill. So we're gonna move the fill extension real quick. Let's get because I don't want to get it too crazy. Let's get this cleaned up. Boom. We're gonna get this cleaned up. I know D, you got the levels. So we're gonna run another fill from this just for demonstration purposes. To low. Boom. What did they do? They came up to the 50% retracement. So next time you see a gap, man, run your fibs, right? Run your fibs real quick. Go ahead and get those fibs up there. Bow. As soon as it pulled back, it came to a 50% retracement. It got the hemmed up. Couldn't get it. So even if you didn't catch that play, everybody, I know some people cannot get out of the bullish mindset. It happens to the best of us, right? We all traders, we all humans here, right? So you simply say, okay, bet it ain't moving. It's jammed up at the 50. It can't get to the 60, can't get to the 78, nothing. All right, bet. Let me go short, right? Flip the script. Be wrong fast, get right quick. I know my motto. Yeah, you gotta be understanding. Like a lot of people gonna rely on that stuff, but the reality of it is just because yes, it may be a good company and very aware of them, but they gotta follow the rules. They know people gonna run in there and they're gonna dump the bag on you. All right, so let's get over to Apple real quick. Apple. Apple. So, the Shay, what's up? What you got for Apple? Like, what's your question? Because remember, this is our
I've been watching it drop. It's just like dying. Hold on, I'm at work. I'm trying to get my level off the thing.
Okay. You watching it
One
dying?
second. Yeah.
Oh, it got. Oh, it's not. It's real now.
So the last couple of days has been dropping, but one of my levels was the 170.12, and then I had the 167.90.
Hmm.
But I took my profit because I'm still learning this stochastic RSI,
Uh huh.
and on my lower time frame is at the bottom of it. So I, you know, take that as it can possibly bounce.
Hmm.
I know it's in a oversold area basically.
Yeah. Well, so do you recognize the pattern I drew on the screen?
Hold on, I'm going to back to the head and shoulders.
No.
Inverted. Oh, M. I'm not
Yes.
I'm not familiar with all the patterns just yet.
Okay. Cool. Don't worry, I'll go over it. So this is a M pattern, or better known as a double top. So most people call it an M because it's easy to recognize from the uptrend, down, back up. It forms an M on the way out, right? The breakout. Let me clean it up again,
Okay.
right? So your most people go like this. This is resistance, right? Highest point where price got rejected from. Okay. Boom. This is your resistance. The lowest point is your support, right? So what we gonna say, like, all right, that's the pivot point here, but that pivot point is also our breakout level, right? So you had equal tops. Price got rejected from equal tops and price starting to break down. Now, head and shoulders, you would have had an uptrend. You had shoulder here, drop down. That would be your head. Then you drop down again, form your right shoulder like that, and then it goes out, right? So a head and shoulders kind of play out like this. Go up, bing, come down to a level, bing, go up, bing, come down about the same level. It can be a little lopsided, right? This is a perfect head and shoulders right here. Bing, 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 right? Let me slide the monitor over. So this what a perfect head and shoulders look like. Nice and even, right? What my little pattern at? So we'll go bing, bing, bing. Nice and balanced, you know. There you go. That's what a nice, pretty head and shoulders look. That's a perfect one, right? But we ain't in a perfect world, right? And we know good and well, life be lifing. So we gonna sometimes head and shoulders be looking like that. They get the wop side of neck. You get the whoop wop. You feel me? They hit you with the whoop wop bam. So you get that little wobbly neck like that. Sometimes you get a perfect one, sometimes you get an imperfect one, right? But this pattern here is a double top. The head and shoulders pattern goes from the head to the neckline, and then you move that down to the breakout. And there you go. That'll be your measure move for head and shoulders, right? Same thing for a double top M pattern. They got the same measured move, right? That's why we mark the resistance to breakout or support level down below. So we measure our move out, clone, boom, and then we paste it there. Boom. Yep, yep. Now that's our measured move. Now, will it actually get that low? Maybe yes, maybe no, right? So we're gonna take that number we have there, right? It is 3282. Divide that by two. We're looking at 1641. Do do. I should have 10. All right. Oh, and this our secondary move. This is our halfway point, right? Do. So you got TP1, TP2. This is the conservative play. This is the aggressive play, right? Now, if they cheese jump out their charcuterie board, then you'll be looking at these lows, which is where I want to get them at. You feel me? This is what I'm looking for, man. You not here that 121. Yeah, yeah. The boys don't know me. You don't know me, son. You don't know me. Now, if we want to get spicy with it, now we can say, well, we a little smooth with this. We'll run this fib extension. Where was our pivot point at from there to back up here? And then I want to see like where it's gonna break down to, right? So if I run it from this level to here, they're gonna give me 200% around 158. My 1618 is around what price? Actually, where we currently sitting at the close, so it's already pretty post market. It hit the 1618 extension level, right? It already went past the 127. Now, do 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 do.
I'm sorry, Neil. Why did
Yes.
you put it? Your starter. What did you start your fib from? The
from a high to this low, back to this high.
okay. Thank you.
No problem. Let me make do this. It'll probably make things easier to see. Okay. All right. Then let me do. See? Can you see it now? So if I was seeing a
Yes,
move
I
break
see.
down now, if I was in this part of the week, and let's say we was trying to get our trend prediction, this would be a short term prediction here. So now once it actually finds a pivot point and pull back again and put in a lower low and pull back and give us a lower high, we can readjust this field, right? So let's say we want to run it from this low and then to give us a higher high back into this said order block, right? Because we have an order block here. Boom, boom. And we're gonna say it's gonna pivot somewhere in here. Now we're gonna have different, field levels. So that's why you're standing out like that. That was the pivot point from the high to the low back to the last swing high, right? And then it gave us our extensions that we can potentially use. These are prediction tools, right? So based on that said calculation, we had a little more to go before we say, all right, we full extended. Now I would say it is more field numbers that we can possibly add to the extension, right? And then it'll kind of like give it out. Yeah, here they go. Boop, boop, boop. But it kind of get much, right? We got plenty of things. So if I move it back with my additional fibs on, I normally like to kind of play it close and readjust. I don't want to say, oh, we got all these numbers on here, right? But there you go. I normally keep the other ones off, but yeah. If we get to the 241, there you go, 300, 327, then I'll be on the moves. So, get what I'm saying? Smooth.
Thank you.
No problem. Uh, well, here's the thing. If you want to get the rest of this move, you want to enter at the neckline, right? But if you already notice price coming down, you can enter the move at your retracement zones where giving you entries at, and then you can trade it down to that level and see what happened, right? This the thing about trading down to M patterns. It may not be an M pattern. It's not an M pattern until it breaks out. What it is, we have potential M pattern. It's potentially can be an M pattern, but it's not a guaranteed M pattern until I see a break and close of this level. So it breaks and close at 165, right? Then you know for sure we got a legit M. But who's to say this may be a strong support level and they bounce price back up and do something else? So you trying to hold to the moon and ride it down to the dirt, you can be losing unnecessary money. So it's safer if you didn't catch it up here is to wait for you get a break and close of this because they're gonna give you an opportunity to get in, right? And from that, you can ride it on down to the dirt. Okay. So let's kind of let me do this real quick. Let me drop down to the daily chart. Oop. Okay, cool. So just like here, you seen it. You would have noticed Apple was breaking down, right? Boom, it pulled back. Okay, great. And it started breaking down again. Boom, it pulled back, gave you another opportunity. So you're going to have plenty of opportunities to get into this market. You don't have to say, oh, I'm just going to jump in just because I potentially see an M and it may not play out. And then who's going to be losing money, right? You got to play these things safe. You don't want to just overstand yourself just because you see a potential chart pattern. Potential and what it is, normally don't play out this way. So, yeah. Uh, Costco. So that's Apple. And get a couple more charts. It's kind of going over the same stuff. So remember, people, fibs, order blocks, direction, watch chart pattern, market levels, If you wasn't here earlier, just go back, rewatch the start of the video as we went over the last chart. This all stuff is the same stuff. It breaks down across all markets, across all charts. Just run it back. So what's your deal with Costco? What you got for it? Waxed. What you got on what Costco's got on your 40? What you got for it? Mm, well, Costco's running.
Sorry, man. I'm just still at work.
Ain't no
Give me a
problem.
minute here.
No problem, no. Mm, Costco's at all time highs. I see.
Yeah, I, I charted out a put for Costco for 640.
Mm, mm. This thing is bullish. Then they have some news. I think they said it's going up on the hot dogs last time I checked. Man, they got some power. Mm, definitely hot. It's hot. Boy, this thing hot, boy. Boy, this thing hot like one of them PPP loan scams. They won't. Mm, mm. When you took that put, like what you looking to do? Like you looking for a quick scalp on it?
Yeah, I took a put for Costco 640 put for 2 weeks out from now. So the 22nd.
They got earnings on Friday, you know that?
Yeah, they got earnings tomorrow
Thursday.
after.
Yeah. Yeah. Huh.
Just based off the way I charted it, I don't know if I'm charting it properly or not. I'll
Well,
probably hit you up for a one-on-one class or something like
okay.
that afterwards. But yeah, talk to me.
All right. Well, shoot, man. Listen, I love reversals and I love taking stuff to the dirt, but this thing is hot. This thing is hot, man. Shoot. Even in post market, they went up a whole nother point. That put'll probably play out on earnings, but here's the problem, right? When earnings come out and that fluctuation, that thing goes up a little bit and then tank, it is gonna smash your contract. 2 weeks out is not enough time for you to sustain a violent move that's gonna happen tomorrow.
Okay, that makes sense.
Yeah. And then you look at it, it's already up post market. So you really like no time I tell people, I just tell you, yeah, you can do this, you can do that. But like straight up and down, they're gonna take all your money, no matter you right or wrong, if you hold that past Thursday. If it goes down, great. Look at what happens pre-market. You want to make sure that thing probably you need to have some type of forward progress. So we're on a 1 hour chart now. Let's put the standard hours on real quick. All right. All right, cool. So we hit a high. That's great. Boom. So 775.15 is your current resistance, right? That's your highest point. Now, what I don't like is how they came here, busted U-turn, and came back out with force. So for you to be in a safe zone, you need to look for them to take out this level 768.09. But see what happened when they pull back into this said candle, that 3 o'clock candle. Now this is a little spicy right here. This will get a little spicy for you. All right. Keep your eye on level 771. 770, 69. If it start having trouble around that area, get the heck out of Dodge. It look like it want to turn over and come down and cool off for a little bit. Let me go down to 15. Quick, real quick. Okay, cool. You have a regular bearish divergence that kicked in. Squeeze called it. All right, so see if it'll start dropping at that level, right? But if it breaks that high, don't sit there. Don't let them finesse you like that. You feel me? Since you're already close to the high, you don't have to worry about uh you know holding to see how long you'll be wrong. If you was like down here with your put, then your high is way up there, but you right at the high. So if they take out 775, let's go ahead and get out of there. You It ain't no need to wait to mess around with that because this is a extremely bullish uptrend here. And if they're gonna have when they have pullbacks, it may not be that steep unless something happens with the earnings. They may say they don't know what they're gonna do. If they say something stupid, people may jump the ship, right? But if Costco do Costco, they're gonna, run to the moon, but they will pull back eventually. So I'll keep my eye on them and keep shooting my pop shots, but they ain't gonna go down easy. They're like an overcooked steak. You're gonna be chewing a while, all right? So there you
All right, thanks, bro. Appreciate it.
go. Ain't no problem. Okay. All right. Yeah. Couple more minutes. We get one more in now. Let's see what y'all do. Somebody said Google. What Google got on you? Google owe you some money. They already been spying on you. They've been selling you some stuff out there. Temu. They working together. Mm-hmm. Mm-hmm. Come on, Google. Where you at, Google? What you got? What you want to Google, Jason? What you need with this Google? What it owe you, dog?
I'm not in the current play right now. I just think it's oversold, and I was looking for a quick swing, but kind of nervous because of quad witching next week in FOMC.
Yeah, FOMC. So when they earnings? March 24th. Okay, that's fine. Uh, hmm. Wait a second. These boys. Let's back out. Let's do some basic charting real quick. Let's do some charting. Ooh, is that what I think it is? Well, look, they put in a nice little double top on a 3-month chart. All right, but we don't know what that is until it is what it is. All right, but y'all keep your eye on this. Google one lawsuit away. That's all I'm gonna say. One lawsuit away. They're gonna be nailing the coffin right there. They keep messing up with their AI. That's what their problem is. They keep trying to compete. They ain't got it, Captain. Okay. Let me stop. I know they listening to me. They gonna come mess with me and crap. I'm using Google Chrome right now. They gonna, but if it start twitching and I can't get my videos up later, y'all know they harassing me. All right. So I'm gonna need y'all to go like, comment, and subscribe. Help your boy out so they can push my videos out. If y'all go leave some comments on videos, I appreciate that. You feel me? Help the algorithm pick me up. They be caking. All right. Google coming down. Oh yeah, I like what it's doing on the weekly. I need for this thing to get below the 0 level. Definitely on the daily is definitely below the 0 level on the daily, right? As far as the MACD and everything. Now you was looking to swing it up, right?
Yeah, I was looking at maybe what 3-month contract out like June.
And you was trying to go long on this.
Yeah, but like I said, the issue was of course FOMC and quad witching on next week. So that's why I was
Yeah.
like, I don't know. Right now is the time to do that.
And why would you want it to go long? Question.
Well, I mean, outside of base and chart, I just feel like it. I feel like just both Apple and Google. I feel like both of them just oversold right now, and I feel like kind of like a quick swing, just a quick, I don't know, maybe like a quick 10, 20, I mean, a quick 20% profit swing high
Yeah.
for another attempt to the top. I just felt like it would just been a nice little, I don't know, that's just a nice move.
All right. What oscillators you currently using?
Sorry.
What oscillators you're currently using for your technicals? Like you use the
Uh,
MACD or stochastic, any of that stuff?
I use the MACD.
All right. So on your MACD, you see if you look at mine, right? You see how this pointing straight down, it ain't got no give in it. It ain't bending or
Right, I see
nothing.
that.
All right.
Mhm.
So let's back out to the weekly chart, right? So you see how it crossed right here and it's open and it just heading down to zero level until this weekly get down here. That's still high momentum to the downside. So if it do
Mhm.
come up, that's just a small pullback because they driving all the momentum downwards.
I got you.
You know what I'm saying? So let's drop down to the 4 hour now. Let's see if they got any give. So right now it looked like it's trying to find a base, but we so far down here is how high actually can go. Like what can be a decent target here, right? So we have a gap right here, but they need to beat this level to even try to make an attempt at that gap, right? They got to get over 134.37, and you look post market, they went down another
Like
30
40
cents.
cent, right? Or something like that.
Yeah, about 30 cents, nothing too serious, right? But we know we're in a extreme downtrend, so you're probably gonna get a buy signal soon on the 1 hour. Like right now, they're trying to pull up on a 1 hour, right? Oscillate, everything is flipping. They trying to reset the oscillators, give it a little breathing room. So we're gonna pull back. But me personally, if you want to take that risk and count, because you're gonna be counter trend trading. So when anytime you counter trend trading, it can go bad fast any moment, right? So the moment it gets to wherever they think they want to take it to, they'll flip it real quick and go get more aggressive and going down, right? So looking at the pullbacks last time, boom, you had a decent pullback here, then boom, you had a decent pullback here, then it dropped and it done this. So let's measure this out and catch these last couple of pullbacks and see what they done. Mm-hmm. All right. So last time they did a 50% retracement on this leg here before they dropped, right? Okay, great. So from this swing point, we're just gonna move the fib. Let me change it, template 3. All right. This time they did a 65% retracement before they dropped it back down, right? They done this little last little hip hop skip from here to there, but we call that barely 88% retracement. Then they dropped it. Okay, cool. So we'll take it from this point to this low. Currently did a 38% retracement. So they just got done pulling back. So when they done these two previous 2 hour bullish candles and then they start sliding back down, that's probably was the entry at the 38% retracement on this micro trend to drop it. That was your momentum. Now, if they decide to hold this level as support, right, 131.39, they keep holding that level, then we can probably see some stuff to see if they're actually going to pull it up. But let's put the standard hours on real quick. All right. Well, they flopped. Until you get some definite proof or you get them to start putting in a change of character on the 1 hour and stuff like that, I would like to see some more stronger uptrends on the 1 hour to say we're going to actually get a deeper retracement. If not, they're going to continue this thing down because all the selling pressure is going down.
Gotcha. And also, you said earnings is the 24th, right?
Yes, that's what TradingView say, but I double check with
Okay.
another platform because TradingView information on their earnings do be off at times. So check with Yahoo Finance. Always check an additional source for any earnings and stuff like that, right? So they say it's on the 24th. So if they can probably find some support around it, let them do what they want to do. And they can probably find support. You may get an earnings run up. I say back test it, get on your daily chart, then go back and see like real quick, real quick to see. They passed the earnings. What happened, right? Leading up, they was already running back here, but it looked like they stagnant, dropped, popped, and dropped again. So nobody gave a damn, right? So you can do SOS, go back another earnings, see what happens, right? They run up a little bit, they drop down, and then look like the action comes the day of earnings. Then they get a reaction. So it look is very inconsistent far as like what they're do. They ain't gonna give you no clear breakout target or idea. So even from here, back in April 23, it really consolidated, then eventually went up, but that's also was a still kind of considered a bull market, right? So yeah, take that with a grain of salt. All right. So on that note,
Gotcha. Appreciate it.
no problem. That is my time for the day. This was fine. All right, let me stop
Thanks for your
sharing.
time, Neo.
Oh, my pleasure. My pleasure. Let me stop.